The Turnbull government has produced a budget that aims to bring Australia's $37 billion deficit back to surplus within 5 years and sees small businesses, infrastructure and education emerge as winners. Let's take a look at how the 2016-17 federal budget will affect you. To begin, middle-income earners will get a tax break from July 1, 2016, after the upper limit for the middle tax bracket was increased from $80,000 to $87,000. So the most tax someone in that income range will pay is 32.5%. Without the bracket change, they would be paying up to 37%. This will see around 500,000 taxpayers avoid shifting into a higher tax bracket due to inflation. In contrast, high-income earners will be watched carefully as the ATO establishes a task force to tackle tax avoidance. The government is focusing on the super wealthy as well as corporations who avoid tax by moving their profits offshore. We've seen a tough overhaul on superannuation tax breaks this year, with wealthier retirees to pay more on their super. Those earning upwards of $250,000 will be hit by a tax hike on their super contributions from July 1, 2017, while lifetime non-concessional super contributions will be capped at $500,000. The cap for concessional super contributions will be lowered to $25,000 per annum, while tax-free super accounts will be capped at $1.6 million. The government estimates this plan will earn up to $2 billion over 3 years. On the flip side, the government has decided to ditch plans to remove the low-income superannuation tax offset. Small businesses will be pleased as their business tax rate drops 1% to 27.5% on July 1 this year. Previously, a small business was classified as one turning over less than $2 million. That definition will change and include businesses with an annual turnover of less than $10 million. Those businesses will also enjoy an instant asset write-off for assets valued at less than $20,000. These changes will affect around 870,000 businesses and 3.4 million workers. The government's aim is to have all companies paying 27.5% tax by 2023 to 24, down from the current 30%, and a flat 25% 3 years later. Commuters across the country will be thrilled to hear about the government's infrastructure plans, with $26.9 billion being allocated to a wide range of major building projects over the next 4 years. These plans aim to better connect Australians while injecting more jobs into the economy. As usual, education has been a high priority for this budget, with the government allocating $33.7 billion to education. An extra $1.2 billion will go to school funding between 2018 and 2020, and there'll be $118.2 million allocated over 2 years to support students with disabilities. On the flip side, this budget also sees cuts of $152 million over 4 years to the Higher Education Participation Program. Turning to healthcare, the federal government has plans to save up to $51.4 million over the next 4 years by making amendments to or removing items from the current Medicare benefit schedule. The government also announced they expect to spend $2 billion more on health in the next financial year, with increases in funding to hospitals, health services and more. Finally, smokers won't be pleased to hear about a hefty hike in the tobacco excise. The rate will rise 12.5% a year for the next 4 years, resulting in a packet of cigarettes costing around $40 by 2020. Chances are the budget will affect you. So if you'd like further information on these areas or have other accounting questions, we welcome your call or email. Thanks again for watching On the Money.